Milan. Today we will be doing trading stock adjustments. Basically, when it comes to trading stock adjustments, we're looking at the factor of whether we're having a trading stock surplus or we will be having a trading stock deficit. I will explain all of those in detail later on. And trading stock surplus and deficit, all of this results from from one process we normally refer to as trading stock verification. And I will explain everything thoroughly as we get deeper into this topic. Now, note that when it comes to trading stock, this is just an overview, and I'll explain everything thoroughly as I said later on. We will have people, sometimes it's our own employees as the company, that do what we refer to as stock count. Okay. I was just looking for pictures to put into the slides, and I came across this company, which actually its main business is just to count stock. So you can employ an external company to come and do stock counting. Before, when they did stock counting, they will normally count the number of items on the shelves and in the warehouse, and they will write down on a pad. Now it's different. They actually use scanning machines to count the value, actually to count the number of items that we still have in the warehouse and the value of those items, obviously. And they just use barcodes, they scan the barcodes, and that's how advanced it has become now. Now, whatever has been counted must be compared to what we have in our books. Remember, whatever is in our books, we recorded it because we had a source document for it. So if we bought stock for cash, we will have a bank statement or an invoice. If we bought it on credit, we will have a credit purchase invoice, which comes from a creditor, and all stock returned will have credit notes and stuff. Now, all of those things, we use source documents to record stock in our books. And it starts with the source document, it goes to the journals, and then it goes to the general ledger until it ends up in the trial balance as I am showing you right now. So all we're doing when we do stock count is to verify that whether what we have in the trial balance is accurate by physically going back into the shelves and into our warehouse, physically counting each stock. Okay. Now, question is, for us to record stock in our trial balance, we use source documents. And stock verification or stock counting is done physically by going straight into the warehouse and into the shelves and counting stock, each item physically. Between the two, which one do you think will be accurate? Will it be the value of stock that results from stock count, or will it be the value of stock that we have in our trial balance? It should be the value of stock that we have as per the stock count, because we can reliably say that this is what we have in our warehouse, this is what we have in our shelves. Well, else when it comes to what is in the trial balance, we could have made a mistake in recording stock, or some of the stock that we recorded properly went missing, it was stolen, some were damaged. A lot of things could have happened, but all we can rely on is the actual stock that we have on our shelves, on our floor, or simply in our warehouse. Okay. Now, what is this trading stock that we're talking about? Trading stock is simply goods or merchandise we purchase with the aim to resell at a higher price so that we can generate profit. So if I bought something to resell at 10 Rand, I'll put into that a markup price so that I can generate some profit. And obviously I'll sell it at a higher price so that I can actually generate profit on it. Okay. Now, trading stock for your syllabus will always be measured at cost price. When you go to varsity, it's a different story. Okay. I don't even want to go there, but it's normally measured at the higher of some things that you will learn when you get to varsity. But for now, just remember for your syllabus, it must always be measured at cost price, meaning that when we buy it, we will record it at cost price, and when we sell it, it will decrease at cost price. When we return goods to the creditor, it will decrease at cost price. When we receive goods from the debtor, obviously, debtors are all customers are allowed to return goods as long as they're not damaged. We will simply add them into our stock at cost price, but you need to remember to exclude discount. Okay, especially when you buy stock and you're given a discount, the cost price will not be what the markup price was for that item. It will be what we have paid for that item. For instance, as I've said, if I say an item, the cost price of an item is 10 rand, but the marked price on that item was 12 rand. However, when I went to buy that item, I was given 2 rand discount. I will not record it at 12 rand. I will simply record it at 10 rand because that is the actual amount that I've paid. But obviously, you have to include all costs that you incurred from when you bought those items up to where those items are ready for sale. For instance, it can be installation costs when you talk about laptops, when you talk about any item that you need to install before you can sell to a customer, all the costs, including transportation costs of that stock, will be included into the cost price of that item. So that's what cost price is. But for now, you don't need to worry about that. You just need to know that stock will go up at cost price and it will decrease at cost price. In our books, we will simply record it at cost price. As I've said, when you get to us, it is a different story. All right. If an invoice was erroneously omitted, you will need to increase sales by the selling price and debtors control by the selling price. And then you will increase cost of sales. Remember, cost of sales go up whenever we sell goods. You will increase cost of sales at cost price, and then you will reduce your trading stock at cost price. So trading stock goes with cost of sales, sales will go with debtors control. If those goods were sold on credit, if they were sold for cash, then sales will go with bank. Bank will obviously go up on the debit side, and both of them will increase at selling price. However, cost of sales and trading stock must be at cost price. Remember, for as long as sales go up, cost of sales will also go up. When sales go down, cost of sales will go down. But the thing is with cost of sales, it always goes up and down at cost price. Cost of sales, in this case, remember an invoice was omitted, meaning that it was not recorded. And when we sold goods, it means sales went up. That's why we will add to sales and the selling price of whatever we sold. And we will add the sales amount, actually the selling price of what we sold to debtors control if you sold it on credit, all at cost price. Cost of sales will increase at cost price and trading stock will decrease at cost price. Remember that. That is when an invoice has been erroneously omitted, meaning it was left out. It was not recorded. So we are simply going to record it if it was omitted. These mistakes are normally discovered after we compare our stock take amount with what we have in the trial balance. And these are the mistakes that we will uncover. That is another thing when they talk about what are the procedures you need to follow to ensure that your stock is correctly measured. And then you can come up with this thing. We need to do thorough stock verification by doing stock taking. Okay, so that's how you can discover it. Some of your stock is missing, or some of your stock was damaged, or some of your stock was destroyed or stolen, as I've said. Okay, like I've said here, the reasons, one of the reasons what we have in the warehouse and what we have in our books will be different is because someone might have erroneously omitted an invoice. Normally that is a bookkeeper, a sales clerk in essence. All right. Whatever you do with the sales value, do the same with the cost of sales. Remember that sales will always be at selling price, cost of sales will be at cost price. That is, if sales increase at selling price, cost of sales must increase at cost price. If sales decrease at selling price, cost of sales must decrease at cost price. All right. Let's look at this example one. where we are given a pre-adjustment trial balance for the year ended 28th of February 2016. In our pre-adjustment trial balance under the financial position accounts section, we have trading stock amounting to 800,000. And under nominal accounts section, we have stationery. Stationery is normally what it's a lot of people might confuse stationery with stock. Note that if I am selling, for instance, let me say Batu. Okay. Let's say Theo Baloyi sells Batu, all right? As he sells, obviously he sells shoes. Now he will need stationery. Normally stationery is used in the office. So he will buy stationery that will be used in the office. And understand the main business, his main business is to sell shoes, not to sell stationery. So stationery is what is being used so that you can be able to sell those shoes. Because when you sell those shoes, you need to record them. And when you print receipts or slips or purchase invoices, you need a printer for that, and you need blank pages for that. And all of those will be part of your stationery. Obviously, a customer will need to sign the slip. You need a pen for that. All of those things that are used in order for us to run the business properly and are not our main core business will be recorded as an expense, but for as long as we have used them. I will explain that later on. And that's what it is here. So basically in this company, they are simply selling stock, which it can be stationary, but the one that we have under nominal account section, it's only stationary that is meant to be used, not for resale. All right. And then they said under adjustment, we've got stock counts. Remember, stock counts, I said it's where you physically go and count stock. And as I've said, now they use machines and they scan the barcodes. It's not like they normally did years ago where they used to count each item and record it on some notepad. And now they simply use machines. Okay. I just wonder if those machines automatically are connected to the computer and your system will be automatically updated and your computer does the comparison and you don't have to go and edit everything else. It just estimates, it's just barcodes. Obviously, when you have a barcode, you have the cost price or whatever you've counted, and it takes the total and compares it to what we have in our trial balance, and then it calculates trading stock deficit or surplus automatically, and then we don't have to do it. Now, some students ask me, then why are we doing accounting? It's because we are trying to teach you to help the computer think. So if there isn't such a system, I don't know if there is such a system, now you know that you can actually come up with the software that does that, where you just scan the items in the warehouse and in the shelves, and then automatically gets updated into the system, and the computer automatically calculates trading stock deficit and surplus for you. But how do you program a computer when you don't know how to calculate trading stock deficit and surplus? That's where we come in as educators. All right. Now, according to the stock count, at the end of the financial year, it revealed the following on hand. Understand, when we say something is on hand, it means we have it in the warehouse and we have it in the shelves. So it's a physical item, it's physical stock counting, and the value of our trading stock as per physical stock count, it's 775,000, and stationary as per the physical stock count is 600. And I will explain stationary later on, but for now I'm just going to focus on that trading stock. Point one wants us to calculate trading stock deficit or surplus, and also wants us to calculate the amount of stationery that will not be recognized as an expense. We also need to record the above transactions in the statement of comprehensive income, i.e. the statement of profit or loss in either comprehensive income. And the notes to the financial statement, we need to record all the transactions in the general journal and the general ledger. Okay, let me just explain what is happening here. Please note that in our trial balance, in our books, stock is 800,000. What we have counted is 775,000. Question is, which one is accurate? Which one do you think is the correct value? Is it the one that we have in our pre-adjustment trial balance, or is it the stock that was calculated in the warehouse and on the company's shelves? Which one will be the correct trading stock value? Obviously, the trading stock balance as per the trial balance, pre-adjustment trial balance needs to be compared to the trading stock value as per the stock count. Trading stock surplus will arise when what we have counted is less than, actually what we have counted is more than what is in the trial balance. Then we're going to have a trading stock surplus. I will rephrase that. We will have a trading stock surplus when the stock that we have counted is greater than the one that we have in the trial balance. The reverse also applies. If what we have in the trial balance is greater than the stock that we have counted, we are going to have trading stock deficit. To make it easy for you, the correct stock value that you can rely on is the stock value as per the stock count. So whatever you have in the trial balance must be adjusted to the stock count value. Write that down so that you don't forget it. Whatever we have in the trial balance must be adjusted to the stock count value, meaning that what we have counted is what we can simply rely on. We cannot rely on what is in the trial balance because that was recorded using source documents. Here we have gone into the warehouse, we have physically counted the stock. So we can rely on the physical stock count value more than what we have in our books. Are we good? In essence, what this simply says that if my trading stock in the trial balance, like it is in this case, actually it's not the case here. My trading stock in the trial balance is 12 Rand. And what I've counted is 14 Rand. Which one is accurate? Is it the 12 Rand I have in the trial balance, or is it the 14 Rand that I have counted? It is the 14 Rand. So that 12 Rand that I have in the trial balance is incorrect. So I need to correct my books by taking it up to the correct value, which is 14 Rand. So when I take it up, obviously I'll take it up by 2 Rand. Do you get it? So that 2 Rand will be what we call trading stock surplus. All right. I know some are taught that when you calculate trading stock surplus, you need to take stock count minus what you have in the trial balance. If the number is positive, you must do whatever. No, 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 no. Understand what you're doing. Okay. It's not about the negative, it's not about the positive. It's all about which one is the correct value. And what we have in the trial balance must be corrected to the correct value. I hope that makes sense. The correct value will always be the stock count because that is what we can rely on. Okay, obviously, when it comes to trading stock count, I will recommend that most businesses, like this business that I've just discovered now, you employ someone like that who is an external, which is an external company. The thing with external companies, they come with a cost. So meaning that your stock might be a little bit more expensive. It's because some businesses actually inflate their trading stock. When they calculate stock count, they inflate their trading stock. When your trading stock is higher, it means that it boosts up your balance sheet or your statement of financial position. It boosts up your financial position in essence, which is not the true reflection of what you have as an asset in the company. Remember, every company wants the assets to be higher. They want their balance sheet to represent a positive financial position. So this can be inflated if it's done internally within the company. That's why I will recommend that you employ an external company to come and verify your stock. All right. Now, trading stock deficit arises when trading stock amount as per the stock count is less than the trading stock amount in the trial balance. Let me go back to the example that I gave you, where we have our trading stock in the trial balance is 12 Rand, but what we have counted is 10 Rand. Between the 12 Rand and the 2 Rand, which one is the accurate one? Which one can you bet on and say this is the correct value? It is the 10 rand, meaning the one that you have in the trial balance must come down. So when the one in the trial balance goes down, that difference is an expense. And that's what we call a deficit. I hope you wrote everything down and now it makes sense. Now let's go back to the example that I just gave you earlier on. Please note that in the trial balance, the amount was 800,000, and when we did our stock count, the amount was 775,000. Meaning that what we have in the trial balance, we can't rely on that one. We can only rely on the stock that we have counted. The one that we counted must be reflected in our books. So we need to correct the one that is in the trial balance by bringing it down. By how much in this case? We're going to bring it down by 25,000. This 25,000 is what we call trading stock deficit. The reverse will be a surplus, obviously. How do we record it? We will start by recording it in the general journal after comparison. We will debit trading stock deficit because it is an expense. Trading stock deficit is an expense. Expenses increase on the debit side. Just to get a thorough explanation on that, I do have notes on that. I think it's accounting equation or definitions. Just look for that on my channel. I do have a video on that where I explain on which side do expenses increase, on which side do expenses decrease, and on which side does income increase, on which side does income decrease, and stuff like that. Now, in this case, note that we are going to have trading stock deficit. Because it's an expense, it will be debited by 25,000. All right. And then we are going to credit our trading stock. Why are we crediting our trading stock? Trading stock is an asset. We are crediting this trading stock because, remember, this is us recording what we have discovered. Already what we have in our books is incorrect. We've got stock measured at 800,000 and that is incorrect. So that 800,000 needs to come down to 775,000. That's why I'm simply processing this general entry and hence I'm crediting trading stock. I'm reducing that 800,000. By doing this process, my trading stock in our books is no longer sitting at 800,000. It is now being brought down to 775,000. Trading stock deficit, as we have said, it's an expense. Obviously, it will go to statement of profit or loss. We are going to record it under operating expenses. Please show workings in brackets. And I will explain this later on. Whatever in the trial we have in the trial balance, before we compare it to what we have counted, we need to adjust it. We need to take into account the omitted invoices, the omitted returns, and all of those. And whatever we are left with will be the one that we compare with what we have in the warehouse or in our shelf as per stock count. In this case, you didn't need to go through that. You just had to, because there were no adjustment before the stock count, you just had to put it as 800,000. And in this case, it resulted in a trading stock deficit, which is an expense of 25,000 rand. Meaning that when we go to the notes to the financial statement under the inventory note, we are going to have trading stock. But whatever you put under the inventory note must always be stock as per stock count. Not the one that you have in the trial balance, but stock as per stock count, which was 775,000. All right, let's move on. Now we're going to deal with that stationery that we spoke about. Here's the thing. Only stationery used must be recognized as an expense. Highlight the word used. Somehow I always say to my students, highlight the word used, and only stationery used must be recorded as an expense, but I always see miracles. From grade 10 to 12, I always see miracles. People don't expense what needs to be expensed. They expense what they think needs to be expensed. And I think it's because people actually memorize instead of understand. Understand this. Only stationery used must be recorded as an expense. Only stationery used must be recorded as an expense. All right. Note that here stationery is not sold, but rather it is used by the business, and as such, it must be recognized as an expense. So let's say we bought 10 pens for the year. Okay, this is an example. And each pen, let's say, cost you R1. So 10 pens will normally be amount to 10 rand, right? But we've only used 8 pens. How much must I recognize as an expense? It is the 8 rand because I've only used 8 of those pens. The other 2 that I haven't used, I'm going to keep it as consumable stores on hand, and they will probably be used next year. You got it? All right. You need to compare stationery amount purchased or net purchases of stationery, which is the one that you have in the trial balance, with the amount of stationery that has not yet been used. So the one that has been counted has not yet been used. Think about it. The reason why we counted it is because we have it in the shelves, we have it in the warehouse. It means it has not been used. Otherwise, it wouldn't be there. In essence, not in the shelf, actually. It will be in the warehouse, probably wherever they keep the stationery or in the safe. So the fact that it's still there, it means it has not been used. Okay. Now, when we compare the two, what we purchased, remember what we purchased is all the stationery that we have. It includes what we have. What basically the stationery that we have in the trial balance is the cost of all stationery, including the ones that we have in the warehouse. They are all in there. But the one that we have in the warehouse, we cannot expense it. So that's why we're going to take the one that we have in the trial balance minus the one that we haven't used, so that we arrive at an amount which is an expense, and that will be what is used. So purchased or net purchases of stationery minus stationery on hand equals to used. And then you can manipulate the formula however you want it. Obviously, as I've said here, the difference will be an expense. Remember, used expense, unused consumable stores on hand, used expense, unused consumable stores on hand. See, I'm emphasizing it now. Don't mess up later on. The amount counted must be recognized as consumable stores under the inventory note. And this amount will only be expensed the following year when it is used. Again, used expense. We only expense what we have used. Whereas stationery packing materials, we only expense what we have used. What we haven't used will be recorded as consumable stores on hand under the inventory note. So what we have in the trial balance is 15,500. What we have counted is 600 rand. So how much stationery have we used? Total purchases minus what we still have. We'll be left with what has been used. And that has been used, we are going to recognize it as an expense. So our expense is supposed to be 14,900. meaning that 15,500 that we included under nominal account section as stationary expense is incorrect. We need to take it down to 14,900, and we're going to take it down by 600. So we need to process that. How do we process that? By debiting consumable stores on hand. Consumable stores on hand is an asset. Assets increase on the debit side. And our consumable stores on hand was 600 Rand. And our stationery needs to decrease. Remember, stationery is an expense. We need to reduce it. Remember, at the moment in our books, our stationery is sitting at 15,500. That is incorrect. It needs to go down to 14,900. And for it to go down to 14,900, the fact that it goes up on the debit side, it means that when it goes down, it will go down on the credit side. That's why we credit stationery by 600. And this is the stationery that we haven't yet used. So this is where everything starts. Okay. Now I'm just going to explain it. I've done trading stock deficit. I've also done consumable stores on hand. Now I'm going to show you before you can even, this is like you're starting all over from scratch. You start with the journal, and then you're going to take it to the general ledger. I'm going to start with my stationery, with my trading stock. Sorry for that. My trading stock at the moment in the trial balance, it was sitting at 800,000. Is this correct? No, it needs to go down. It is going to go down by what we call trading stock what? Deficit, which is an expense. And that comes from the general, it's going to go down by 25,000. And when it goes down by 25,000, trading stock left will be 775,000, which is the correct value. IFRS and ISS wants you to record all your assets at the correct value. Otherwise, it's corruption, by the way. And you realize that a lot of companies are going down because of that. Steinhoff, I know right now it's going through insolvency because it can't settle its liabilities. If I'm not mistaken, the creditors have gave them a deal that they will operate, but creditors will take 80%, will own 80% of the company, and the shareholders will only own 20%. Or if the shareholders refuse that, then the company has to be sold, all assets sold, and then whatever is left, that's what the shareholders will have. The rest will go to the creditors. That's why it's so wrong to have liabilities, because liabilities have claims over the asset of the company. But we're not there. Right now, it's simply, I'm trying to make you understand why you cannot cook your books. Okay, you can't cook your books as the company. And most people that do this are registered chartered accountants that know what needs to be done. And that's why when you are an external auditor, you need to be very, very smart because you're auditing people that already know what you are going to audit. So it's easy for them to manipulate the financial statements. And they've done it. It's not just Steinhoff that has done it. A lot of companies have done it. I think Hewlett, is a Tonkat, Hewlett has done that mistake. I can't think of other companies in America that also went down due to this. Can't recall the companies, but cooking books is just wrong. Okay. All right, that's why our trading stock here is sitting at 775,000. So we do this adjustment to make sure that we're not putting our books into the oven, baking them or cooking them. Okay. All right. All right, obviously, you know that the contra account here was trading stock deficit. So I'm going to go to that account, which is trading stock deficit. It's an expense. Therefore, it will be under nominal accounts section. Because it's an expense, it's plus minus, meaning that it goes up on the debit side and it goes down on the credit side. All right, so it will happen at the end of the financial year, obviously, because all of this is happening at the end of the financial year. Stock count is done at the end of the financial year. And now that I think about it, periodic and perpetual, under perpetual, still need to do it at the end of the year. You don't have a choice. Now, not to confuse you there, but it's another topic under inventory. All right. So we will simply have trading stock. It's under general journal, and the amount here will be 25,000. Because it's an expense account, we will close it off against profit or loss account, meaning that all expenses and income will go to the profit or loss account, and that will be 25,000 rand. Going back to the financial position accounts section, I'm going to do consumable stores on hand. Remember, I said consumable stores on hand is an asset account. So just like trading stock, it goes up on the debit side, it goes down on the credit side. Okay. Also, these accounts are asset accounts. That's why the sign will be plus minus. And the consumable stores, we have stationery that was not used, which was 600. So we'll simply write the stationery there, which will be 600 rand. Obviously, this is an asset account. It should have balance carried down and balance brought down. So at the end of the year, under consumable stores on hand, we will have unused stationery amounting to 600. That should be balance brought down. Sorry for that. I am quickly going to record it before I simply correct it. When I record it under my stationery, note that under my stationery account, already I have stationery of amounting to 15,500, and that value is incorrect. It needs to be corrected. So I will simply start with that balance brought forward for stationery, and balance brought forward for stationery will simply be 15,500. We need to reduce it by the stationery that was not used. That's why we're putting in consumable stores on hand from the general journal, which was 600. So the actual stationery expense that we are going to take to profit or loss will be that 15,500 minus the 600, which will give us a stationery expense amounting to 14,900. And then we're going to simply total it up. Obviously, we closed it to profit or loss. We're going to total it up, which will be 15,500. We're done with it. Okay. Now I'm going to record that stationery under statement of profit or loss and other comprehensive income. I will simply write under operating expenses. It will be stationery. And I took that 15,500. I'm minusing the 600 because I said the 600 was not used. Net purchases minus what was not used, which is that 600. I will be left with an expense. In this column, guys, you only put an expense. In this case, your stationery expense will be 14,900. The unused stationery will be included under the inventory note as consumable stores on hand, and that will be 600. That's it. Make sure you do not forget everything that I explained in this video, because in the next examples, it'll just be a continuation of what I've just explained. All right. Please check out example 2. This is what you need to do. Okay. You prepare the general journal. The general ledger. Also prepare trading stock surplus or deficit account. Show the amounts that will be shown in the statement of profit or loss. And the amounts that will be recorded under the inventory note. Please click on the subscribe button and also notification, so you may get notification of all the videos as I posted. Also,